All right. Hi, everyone. We are live. Welcome to Market Matters. My name is Katie Kuntz, and I'm a social media editor here at CNBC. I'm joined by our senior markets correspondent, Bob Pisani, and today we're going to be answering all of your questions about the latest stock market moves. How are you doing, Bob?
Hello, Katie. How's things in Los Angeles?
Things are great. I see you're at the stock exchange today. How are things there?
Yeah, good. Cold, unfortunately.
Yeah.
So we'll see what happens here. Hopefully the weekend will be a little bit better.
Mm-hmm. Well, I know that President-elect Trump was at the stock exchange yesterday, too. What did you speak with him about?
I did get a few minutes with him. Jim Cramer had several questions that he got in as well, but it's not the questions. It was the reception that was exceptional. He brought along a good part of his cabinet, including the Vice President, J.D. Vance, but Howard Lutnick was here, Scott Bessent was here, even RFK Jr. Was here. But the president-elect got a quite rapturous reception here. I think it's fair to say that 80% of the floor probably voted for Trump. I didn't do a poll, but I've been down here a long time. I kind of know what the sentiment is. So they were very enthusiastic. And I've been here for other presidents. I was here in 2007 when President George W. Bush came, and he got a very respectful welcome. I was with him most of the time when he was on the floor. But this was very different. This was much more, shall we say, enthusiastic. And when he came down on the floor, J.D. Vance waded into the crowd to say hello, and it was quite thunderous applause. I did speak briefly with the president-elect. I asked him about the tariffs. There's quite a bit of controversy about his tariffs, particularly 25% tariffs proposal on Canada and Mexico. The Canadian authorities have been very unhappy about this, and the Premier of Ontario said that if they instituted these kinds of tariffs, they might halt energy imports into the United States. Parts of the United States import Canadian oil. And I asked the president-elect about that. He said, we'll see. Basically, he's not that concerned. The impression you get talking to him is that everything is essentially transactional, that he puts these things on the table and that it's all subject to negotiation. Now, he didn't say exactly that, but that's sort of the tone of the way these things go. Much of this seems very transactional, meaning we'll see what happens. But bottom line was very, very enthusiastic reception. And he was down here, by the way, because Time Magazine named him Man of the Year.
So, Bob, your friend and longtime New York Stock Exchange fixture, Art Cashin, recently passed away. What did you learn from him over the years?
Yeah, it's been a rough. Last week, Art passed away, and I knew Art since 1997. I've known him 27 years since I've been down here, and he was a real beacon and a mentor for me. I got down here in 1997. There were 4,000 people on the floor, and a lot of them didn't trust reporters. In fact, most of them, they didn't want to talk to them. And Art was one of the people early on who kind of stuck up for me, and that helped a lot. That helped open a lot of doors for me. He was the director of floor operations for UBS at the end for many years. He was a man the Washington Post called the Walter Cronkite of Wall Street. Walter Cronkite, of course, being a very famous TV anchor. And we'll see what happens here. The important thing of what happens to his legacy, but this man had one of the finest reputations I've ever met. The world is full of stock market commentators, but there's a lot of backbiting and jealousies in the business. He had almost no enemies at all. He had a daily market commentary, Cashin's Comments, that he wrote for over 40 years that was widely read on Wall Street. In my experience with him, he was one of the greatest stock market historians, but he wasn't an academic at all. He used stories to illustrate market principles. His primary gift was his ability to take complicated subjects and turn it into an easy to understand narrative. He was a storyteller, essentially. That was his great art. And he was quite a character. Going out to dinner with him was like Mad Men in 1962. He didn't he didn't use credit cards. He paid for everything in cash. You'd sit down with him. Dewar's was his drink, scotch. And he was a very slow and deliberate drinker. You'd sit down, have 2 or 3 drinks with him, and then he'd order pigs in a blanket and a steak. And many nights I went home early, and I come in next morning, and there was Cashin's comments in my mailbox. He'd been up till 1 o'clock in the morning. Could have got home, wrote Cashin's comments, and he paid for all of his bar bills with cash. He thought showing a credit card meant that there was a record of what you were eating, buying, drinking. He didn't use a computer. He wrote Cashin's comments on paper and then called and dictated to his secretary. He didn't have a cell phone. He had an old beaten up flip phone that he almost never answered. He didn't care. I mean, he was very deliberate in his persona. And on the surface, it looked kind of sloppy, but it wasn't. And I can't tell you how important it is. Wall Street is slowly bleaching out all the great characters that used to, men and women who were a bit crazy. Many of them never went to college. Many of them were just great instinctual traders. They stayed out at all hours talking about the stock market. And all that's, of course, changing. Art was one of the last of the old school people, and I miss him dearly. By the way, if you want to read more about Art Cashin, go to my column, tradertalk.cnbc.com. Tradertalk.cnbc.com. There are a couple of tributes to Art that I wrote on there, and you can learn all about it.
Yeah, I would definitely recommend everyone take a look at that. What was the tradition that he had, Bob, at the end of the year?
Well, he always sang, it was a big tradition to sing Wait Till the Sun Shines, Nelly, an old song written in 1905. They began singing it during the Depression. It basically says, don't worry, things will get better. And Art always organized it. And we're hoping to organize it again this year on December 31st. Art's family is going to come in, ring the closing bell, and I think maybe we'll be doing it again on December 31st.
Well, thank you for sharing that, Bob. Definitely a huge loss for stock exchange and everyone there. We had another IPO this week, Service Titan on the NASDAQ. How did it perform in its public debut, and will we see more IPOs?
Well, this was quite a surprise because on the surface, there's not, I'm just checking where it is right now. On the surface, it doesn't seem like an exceptional idea here. They do business management software for the trades industry, plumbers and roofers and landscapers. And what they do is they book appointments, they follow up. It's software for plumbers. And plumbers don't know how to run software. Or how do you make an appointment with a plumber? Well, you can call, but you can do it with software a lot better now, right? So that's what they do. Anyhow, they've been talking about going public for years, and they priced it. The talk was 52 to 57. So these companies put out an initial price range to gauge what the market's like. Then it was up to 65 to 67. Then it priced yesterday at 71, but it opened at $101. Now think about this. The price talk was 52 to 57, and they priced at 71 and opened at 101. That's a hell of a difference. That's like almost 100%. And right now it's about $100. So it's essentially unchanged from where it opened at yesterday. This is a good sign because the IPO market's been terrible for 3 years. The amount of IPOs, the dollars raised, been way subpar. Part of the problem is a lot of these IPOs, they're tech IPOs, raised a lot of money in 2021 in the private markets. And the public markets generally don't want to pay as much money. They're cheaper, which is good. Remember, buy low, sell high, that's the game. And so a lot of these companies are trying to stay private as long as they can. Some of them can now sell shares privately in a private market setting, so there's a little less pressure for them to go public. And there's a long list of companies standing out there for 2025. So let's put it this way: this is the last big IPO of the year, and it ended on a very high note, and it's a good sign going into 2025. And if you want more on that, you can go to my tradertalk.cnbc.com. There's a story on that yesterday.
Bob, one thing that we always get questions about is crypto. Do you recommend investing in crypto?
Well, we've talked about this a lot, Katie. I don't make investment recommendations. I have told people what I own. And I'm one of the very few financial reporters that will ever disclose what they own publicly. Why, I don't know, but it's in my book, Shut Up and Keep Talking. If you want to get it, it's on Amazon. There's a whole chapter on what I own. Essentially, I own index funds. I own the S&P 500. I own an international fund. I own a bond fund. People are always disappointed when they see that because they think I have something bizarre and unusual. But generally, I don't, because generally you don't need to. So the thing about crypto, so I don't make investment recommendations, but you can see what I own if you want. The question is it an asset class? So remember, people have investments. Asset classes are stocks, bonds, real estate, cash, commodities like gold. Those are asset class. In the last 10 years, there has been an attempt by a lot of people, mostly Wall Street people, to convince you that there is another class which they lump under this thing called alts. Alts means alternative investments. What are they? Well, it can include almost anything. It can include coin collecting, like collectibles. But I collect rock posters. Is that an asset class? Well, it's a collectible. All right. How about art? All right, maybe. Private equity, maybe. And now crypto, they're trying to say, well, that's an asset class. It's an alt asset class. Now you got to be very careful about these things because remember, everybody's always trying to sell you something. Whether it's, you should buy rock posters or you should buy gold, that's another one, or you should buy crypto or you should buy private equity or whatever, you should buy coin collecting as an alternative. Be very careful about all of that. It's not necessarily a bad idea, if you have a coin collection that's 5% of your assets, not necessarily a bad, you can argue it's a diversifier. But ask yourself, other than you want to collect coins or rock posters, Bitcoin is an investment. What's the use case for Bitcoin? Okay, they say it's a digital currency. What the hell does that mean? I look at it about, is it money? Is it a store of value like gold? Gold's been a store of value for years. Gold has been money in the past. And the answer is, I'm not sure it's a store of value necessarily. Is it a medium of exchange? Can you buy and sell things easily with it? That's what one of the things money is. Not really, no. Some say it's a protection against debasement of currencies. That ever since we went off the gold standard 50 years ago, governments, some countries have been printing money and inflating their currency. Some have. I would not say the United States, well, there have been printing inflation. I would not say it's drastic. Here's where I'm sympathetic for a use case. I think some countries have managed their economies badly, like Argentina. Other countries like, say, China, well, frankly, governments trying to control their citizens and spy on them. China, there may be a use case there. If I was in Argentina and I saw the value of my money go down and down and down dramatically, not anything like the dollar, we are strong. If I was there in Argentina, I might legitimately worry and think, well, maybe Bitcoin is a store of value. What people used to do is they bought dollars over there. There you could possibly make an argument for a use case. But remember, when you're looking at these things, what do they do? Do they provide some kind of protection for you against, does it diversify your assets? Well, arguably Bitcoin might. Does it help with risk management? Does it lower volatility? I mean, that's one of the classic things you look for when you add something to add something to your balance sheet. Would it reduce volatility? Well, I don't think so. I think it would be the opposite. So I have a problem with Bitcoin in general because people say that the United States is printing money and the value of the dollar goes down. Well, yes, but it is backed by the full faith and credit of the United States government. Bitcoin is backed by nothing at all. And that bothers me. Now you can argue, well, collectibles like gold and what's a rock poster worth? There's a rock poster behind me, a Rolling Stones poster. It's only worth what anybody's paying for. There's a point in that. But I can't understand the argument that, people think that the full faith and credit of the United States government is worth less than owning Bitcoin. It seems like a strange argument to me. I can understand why some people want it. Frankly, you want to know the truth? It's a get-rich-quick scheme for a lot of people. And Jay Powell, the head of the Federal Reserve, said this the other day. He said, these are speculative assets. That's Jay Powell talk for get-rich-quick stuff. I understand that because that's what I've been doing, watching people try to get rich quick for 35 years. They tried to do this with the internet 25 years ago. I understand that. See, you say that. I don't know anything. I don't even know how to spell fiat currencies. If you say that, I just want to figure out a way to make money a lot faster than everybody else. Get rich quick. That I understand. But people have these other they want to justify this intellectually. They think there's something really there. And I have severe doubts. Here's what I'm bullish on. Blockchain. Blockchain is potentially very revolutionary, reducing financial friction. I'm in favor of decentralized finance, smart contracts. This excites me. Bitcoin is a cryptocurrency running off of blockchain technology. And that doesn't impress me as much. Wait till you get hundreds and hundreds of these coins floating around. Talk about scarcity value. We'll see how much scarcity value there is when Bitcoin is not, 90 or 95% of the value of all cryptocurrencies. We'll see. I'm not so sure. So I've said a lot here. My concern here is what the use cases are outside of some people in some countries where I think there's some legitimate worries that they have, and I understand what they're doing. I still want to figure out a strong use case.
So, Bob, switching directions a little bit here, we have a new administration coming into office soon. So will the government end its conservatorship of Fannie Mae and Freddie Mac? What do you think?
Oh boy, that is a hard subject. President-elect Trump has said that he wants to privatize Fannie Mae and Freddie Mac. And by the way, you probably don't even know what they are. Fannie Mae and Freddie Mac are government-sponsored enterprises. They were basically set up to help the mortgage market. I mean, Fannie Mae was created in the 1930s, I forget when, but under Roosevelt, basically to expand the secondary mortgage market, right? So they had this problem, like the banks held their mortgages. And so it was difficult for them to go and lend more money when they had all of this lending on their books. So what they said, what if we just package these things into mortgage-backed securities, like thousands of loans together, and then sold them to investors? The banks would then get money and they'd be freed up to invest more. And actually, that's exactly what happened. Fannie Mae greatly expanded the secondary mortgage market. In fact, they created it, and they became the primary means of essentially guaranteeing these mortgage-backed securities. So they created liquidity in the mortgage market in the 1930s. Freddie Mac was invented in the 70s. Maybe it was 1970, but it was right around there. And essentially it was set up for the thrift business, but it essentially was a competitor for Fannie Mae. But think of them the same thing. They both basically package mortgages into mortgage-backed securities and sell them, and they guarantee payment to the mortgage holders. That's what they do. So what happened here, this all blew up in the financial crisis. It was 2008, I think. They had trillions of dollars in housing debt on their books. T with a trillion. And they dominated the whole secondary residential mortgage market. And when the housing market cratered in 2008, there were concerns about what would happen here and about wider decline in the mortgage markets and rates and value. And essentially the government came in, the United States government came in and took over Fannie Mae and Freddie Mac. And they've essentially owned it since then. And the question is, do you want to make it private? Well, I don't think it's a bad idea. The question is, would that affect mortgage rates? Would that affect confidence that much? I don't know. Would it affect housing prices? I don't know. That's a big question. And that'll be a very interesting debate. In theory, privatization is a good thing, but we want to keep a close eye on what the impact would be on mortgage rates and on home prices. Sorry about the long-winded history there, but most people don't even know who the hell Fannie Mae is. So it's always a good idea to tell people. I never assume everybody knows exactly what we're talking about.
Mm-hmm. Yeah, thanks for breaking it down for us. So something else that we've talked about before, Bob, is, people at behavioral finance and how when markets go up and down, it can really play into your emotions. So how can people stay consistent in the market despite big gains and big losses?
Well, I've talked about this many times. Look, it's very simple. It really is simple. Don't go sitting around trading all day. It's really a loser's game doing that. It's way too risky. It is not time. It's time in the market, not timing the market. You think you know when to buy and sell stocks. You think you know when Apple's going to go up. You don't. You have no idea. You need to have a plan. You need to say, I'm 35 years old. I'm probably going to live until 95. You should be optimistic. And I want to save a certain amount of money every month and put some in the stock market, some in the bond market, and I want to think long term. And I generally don't want to sit and day trade. And so this is why I tell people very simply, they say, I don't know what to do. I said, I'm going to tell you what to do. Open a brokerage account, put money in an S&P 500 index fund immediately. You will never be wrong doing that over long periods of time. You won't be. You want to think you can, pick Apple stock and that it'll outperform, or Nvidia, you think you're a genius? Go ahead. Jack Bogle, the founder of Vanguard, popularized the idea of investing in index funds and staying with the market, not trying to beat the market, just be the market. Bogle knew that people always thought that a small percentage of people thought they were geniuses. And he said, okay, take 90% of your money, put it in an index fund, and then take 10% and go ahead, invest in Nvidia. But you're going to find out, if you know how to actually calculate your profit and losses, that you're probably not going to beat the market. But at least you won't damage yourself too much just taking 10%. So there's the answer. Be consistent. Don't worry if the S&P is down 3% this quarter. If you're 35 years old and you're going to live to 95, trust me, it's not going to matter if the S&P is down. The S&P was down 18% in 2022. People panicked. They thought, oh my God, I can't handle this. But if you have a longer term outlook, you know how much the market's up since the bottom? We bounced back dramatically. So unless you have an immediate need, and I mean in the next couple of years, if you think essentially, you're pretty old and you don't want to deal with that kind of volatility, the answer is you can lower your exposure. But most people are going to live a lot longer than they think they're going to live. And most people would greatly benefit from not sitting around staring at the stock market every day and thinking they have to do things. Generally, you don't have to do anything but have a long-term plan. Bogle used to say, don't just do something, stand there. Literally, that's what he said.
All right, and then to wrap up today, Bob, we have a music question. Grateful Dead or The Clash? What do you say?
That's a strange question. Those are completely different bands. I saw both of them many times. I saw the Dead many times. The Grateful Dead is a completely different style. They were originally a blues band, went into psychedelic rock, and then later went into country. And what they did in the 70s was essentially create what we call jam band. Bands that went on and riffed on songs for long periods of time. And they had a very, very long-lived career. There are elements of them still going in various incarnations. The Clash were completely different. They were pioneers of, we call it punk rock today, although it wasn't as punky as a lot of bands, but it was punk rock initially in the late 1970s. And while the Clash had a very short career, probably 10 years at most. I think their first album was 1976. And I saw them in 1981, I think, in 82. And their best albums were already behind them. London Calling had come out already. So they might have, I can't remember their last album, but 85 or so. So it was, 9 or 10 years, something like that. And then they were gone. But they had a tremendous impact because what they did, what punk did, was it injected much more. It went back to sort of the roots of rock and roll, much more immediacy. Remember, in 1976, it was the height of what we call, what would you call this? Pink Floyd and Zeppelin. This was album-oriented rock, and a lot of people thought that this stuff had gotten very overly stuffy, orchestral, and there were people who wanted to bring rock back to its roots. The best band in this example was the Ramones, one of my favorite bands of all time, which basically played 3 chords all the time. And it couldn't get much simpler than that. So these bands are completely different. The Clash were a little more advanced than a primitive punk rock band because they brought in elements of reggae, for example. So they really helped expand the palette of rock and roll at a time when it had already gotten rather bloated in terms of what again, it was progressive rock is what they eventually started calling bands like Pink Floyd and Led Zeppelin and Emerson, Lake and Palmer, those kinds of bands. So it was a wonderful time, by the way. That was my height then. I turned 21 in 1977, and believe me, that was the year when new wave hit. So I saw Blondie and the Ramones and Elvis Costello that year. God heavens, all sorts of bands. And it was a great period of foment. I also went to see Neil Young and the Grateful Dead, and I also went to see Led Zeppelin. So it was tremendously. What's sad for me as an old rock guy is rock is essentially dead. It still exists, but you don't see it on the charts anymore. It's country's on the charts, and a little rap is still on the charts, but rock itself you don't really see that much on charts. Really quite remarkable. But when you think about it, rock had a more than 50-year history where it was dominant, from about 1956 to the mid 2010s. And I guess it's not surprising that it's moved on, but you can still find it. It's still out there.
Well, I know that our audience always enjoys hearing your takes on music and bands. And have you gotten any new posters recently? Add it to your collection?
Yeah, I pick at things once in a while. Mostly there are little pieces from late 1960s for stuff that I buy occasionally, and it shows up in auctions. I don't collect anything new, except for a few artists that I think very highly of. There's a couple artists out there, Chuck Berry, who I think very highly of, and Emick is another one. I think these two are probably the best modern poster people that are out there, and some of them do more traditional styles. Some of them occasionally will employ neo psychedelia. That's when I started in the 60s for what we call psychedelia today. So I think very highly of Chuck Berry and Emick as a modern poster artists.
Well, thank you, Bob, for answering all of our questions as always. And thank you to everybody who sent in their questions. We will talk to you again in a few weeks.
Thank you. Nice to see you guys.